Hello and welcome to Finder's YouTube channel. Well, it's been a very tumultuous day in the markets and all week actually, with coronavirus throwing everything left, right and centre. We've seen the ASX crash through the floor and recover literally in the last 10 minutes. Today's losses, we've seen crypto crash through the floor as well. Here to discuss we have Kylie and Andrew from Finder, and we're just going to have a little bit of a chat about what's going on and see if we can get to the bottom of things. So first of all, Kylie, why has the market crashed so dramatically, do you reckon?
Yeah, well, this has been a crazy week, first of all. It's really a combination of factors. Coronavirus is one, obviously, huge part of it. That is potentially going to cause a massive recession or a small recession, whoever you speak to, but a recession is probably coming. The market doesn't like that. And then there's also, this week on the Monday, when we saw it drop around 7.3%, I think it was. That was a huge crash, and the biggest crash that we've seen since the GFC. That was to do with the coronavirus, but really what sparked that big drop that day was the oil price war that erupted between Saudi Arabia, and Russia overnight on the weekend, on Saturday night, I think it was. So it's a combination of the fact that we've got this oil price war happening, which is going to drive down oil prices. The market doesn't like that. We've got really record low interest rates. There's not really much more that we can do. The market doesn't like that either. And then coronavirus is really slowing down business, and we've never seen anything like this. It's scary.
So it's like the oil was destroyed that brought the camels back in an already weakened market because of coronavirus, but
That's right,
we haven't just seen the crash, then it's continued to slide since.
That's right, yeah. So coronavirus, I mean, that was really just that was kind of like the final straw. We've already got weakened economies. There's a lot of debt in the corporate market, especially US corporates, especially with these oil companies and these energy companies. So with oil prices dropping, I think the big fear really is that some of these big companies could default on their loans. They're highly indebted, and if that happens, we could sort of see that infect the rest of the financial market. And
so everybody's very heavily leveraged.
Yeah, that's right. So the ultimate fear is that we could see a credit crunch of some kind. Similar to what we saw during the GFC.
The oil one's interesting because the oil prices going south will benefit Saudi Arabia more than it will the US, because the US is, as far as I understand, the US is always a lot of shale oil collection, which is much more expensive to do. So oil prices going down, it's really bad for the US economy generally, and not as bad necessarily for kind of Saudi Arabia.
Saudi Arabia is the biggest player. It's the biggest oil producer, so it doesn't. I mean, it's not great for any of these oil producers, but Saudi Arabia is the one company. I was going to say the one big producer that can handle it.
Yeah. And
all these other players really can't handle.
They control the reservoir.
Yeah, we saw a similar thing happen. I think it was in 2014. Venezuela was also, that's when Venezuela kind of went downhill when oil prices dropped so far. They just could not handle that. And the fear is now that could happen again. But it could be with a massive country, the US.
Yeah. What do you reckon, Andrew? How low can the market go?
So the US energy sector is already just deep in the red, you're saying, essentially. They can't break even with current oil prices as they are.
Yeah.
So the market's asking right then, what are the odds of oil prices going back up? If this is an artificial movement essentially caused by the oil price wars between Saudi Arabia and Russia within the OPEC cartel, we can't just count on market forces to lift it back up. It essentially goes as long as it goes. So would you say the odds of the energy companies defaulting on their loans is dependent on these OPEC factors rather than the market forces?
Yeah, it's hard to say. I mean, yes, yes. I think is the answer. Yeah, I mean, I'm not 100% on this, but I've heard that these companies rely on the oil price to be $50 a barrel, and it's now heading towards potentially $20 a barrel. So $50 a barrel is for them to make any profit. So heading down to $20 a barrel is really bad news for them. But yeah, it ultimately comes down to these relations with these massive oil producers and what they're going to be doing. And, you know, when Saudi Arabia came out and said that they would essentially flood the market with oil to drag down oil prices as sort of a retaliation against Russia, essentially that hasn't even played out yet. That hasn't even come into effect. But the market was crashed instantly after that news came out. But we haven't even seen that happen yet. So there is still, there's a lot of time. I think that's coming out in April. So yeah, essentially it's not going to reverse anytime soon. It's the long story short. Unless, I mean, it is politics, though, isn't it? Saudi Arabia could suddenly decide not to do that.
Yeah, it's all politics. And speaking of politics, the way different countries seem to have been responding to the coronavirus has been massively varying. You know, when you look at China initially just trying to almost conceal it, and then going into total lockdown, and you know, in some cases like literally locking citizens in houses, which isn't something you can really do in most Western countries.
Yeah.
Italy at the beginning taking it a bit with a grain of salt and kind of not taking it that serious, and then suddenly exploding there. And now multiple countries, including Australia and the UK, and to some degree the US, are you know, some experts are looking at it and saying they're taking it as with a lack of seriousness to the same degree that Italy did. And you know, 3 or 4 weeks from now we could all be in a situation where the country's basically in lockdown. Which Ireland actually entered yesterday, basically, from lockdown.
Yeah.
Which obviously is going to have a very negative effect on the already declining economy.
It's unnerving. It's unnerving stuff, I have to say. You had some. I mean, you had some dark views on where this is all kind of headed earlier today. I mean, you can't be too pessimistic. It could be a short-term thing. Nobody knows. That's the problem. Nobody knows how long this is going to be.
The problem is, right, the underlying economic fragility is worse than it was before the GFC. We've got record levels of debt, household debt, business debt, government debt, all just building up. And this has been going on. It's called the inverted bond yield curve in July last year. People have been calling for a recession for a long time now. And now we suddenly get the oil price wars, the coronavirus, just slap themselves down on the table and saying, hey, here comes recession. Like,
it does feel like it's been inevitable. I mean, last year we did two YouTube videos for Finder. One summarising the arguments why we will see a recession in 2020. One summarising the arguments why we won't see a recession in 2020. They both went live at about the same time, but the one with the arguments for why we will see a recession has got 40,000 views. The other one only has 10,000 views. So definitely there's been a huge appetite. And every time we do a Finder video and we talk about anything like the RBA cash rate or home loans or housing prices or whatever, we get a huge stream of comments of people at the bottom saying recession is coming, recession is coming, recession is coming. Finally, it looks like maybe they were right the whole time, and you know, here we are. I mean, is a recession now inevitable, do we reckon?
I'd say so. But that's just me. And is it a self-fulfilling prophecy? Again,
well, all markets are just psychological in the end, you know,
right,
so if people think they're going to get a recession, it's going to happen. But then just like the market was so fragile that it just couldn't handle these two events happening together.
Yeah, I mean, I've spoken to probably about 10 analysts the last couple of days or the last few days, and they're all pretty sure that a recession's coming. Their view, they think a recession's coming. They think that this stock market crash is probably going to continue for a while. They don't think it's going to be a V-shaped recovery. It's not going to come back from this. And I tend to agree with that assessment. This is pretty insane stuff. Like it'd be great if we didn't see a recession. I guess the question is... It'd
be a remarkable turnaround if it turned around that quickly, really, wouldn't it?
Yeah.
But I mean, you say no V recession, but if you look at just today's ASX numbers, and we only saw this just before we turned the cameras on, they basically, you know, dropped immediately by about 5 or 6% and stayed flat the whole day, and now has recovered almost completely back to where it was. I think some of this could be because there's a Canadian company who said that they have found a vaccine for coronavirus. So, do we reckon that's behind this sort of turnaround?
To be honest, I just saw it as we sat down here. The market was down about 7% last time I checked. And now it's suddenly, it dropped below the 4,000 mark for the first time in 4 years or so, 3 or 4 years. And now it looks like it's surging up. You say that it's the vaccine. I haven't.
Well,
seen
I'm just
anything
speculating.
else.
I haven't seen any other news come out that's different. You know, in the last kind of hour or so, except that.
That would be amazing. I mean, I can see that being a reason why it would suddenly shoot up like this. This is a huge reaction. I mean, it's
right before our eyes. I mean, it's purely psychological, though. We don't know
Right.
whether this vaccine even works.
Yeah.
Presumably, the markets seem to be indicating with a very great deal of confidence that, yes, it works, huzzah, crisis averted.
Yeah.
But one, again, no guarantee it does work, and two, the same underlying problems. We've really got sort of the border closed between Europe and the US. We've really got Italy in lockdown, Ireland in lockdown. The travel industry is still taking its hit. Australia's travel industry has taken a second hit following the bushfires. There seems like a little bit of unwarranted optimism on the part of the rebound.
Too much optimism here.
You're a very negative person. Very pessimistic.
But like
I
the worst things the forecasts are really pointing to is the overwhelming of health systems. You know, if the peak is too sharp, so if everybody gets it at the same time, there's going to be too many people not in a hospital bed. If this vaccine does turn out to be viable, it's still not going to be on the market till the end of the year, and it's about 4 or 5, 6, 7 weeks maybe to the peak. So it's not going to really get rid of the potential, economic impacts.
No, that's right. We haven't seen those economic impacts really play out yet.
No.
I mean, 30% of China is shut down, businesses shut down. That's basically the world shut down.
Yeah.
The world's businesses shut down, basically, when China shuts down. We haven't seen the full impacts of that.
No.
We're seeing some of it in the travel sector. Was it Webjet cutting staff numbers? I can't remember if it was Webjet, one of the big travel agencies, cutting staff numbers. Salaries getting cut.
Yeah.
So we're starting to see some of that. Obviously, the airlines are.
And it trickles down into so many things. I was talking to a friend of mine who works in the food supply industry, the meat supply, and she's saying there's so many events being cancelled left, right, and centre. These people have ordered a load of meat that they've got, and now they can't kind of send it back or do anything with it because the health and safety issues there. But like the trickle on effect from audiences not being in venues is really, really deep and affects so many different people and businesses. They're going to struggle, especially if they're highly leveraged on credit.
And you can see it on the streets too, right? Like you go outside and you go to a restaurant there, and there's not many people there. I went to Bondi the other day. There was no one there.
You can definitely see it in
It was a
Nice.
shock. Yeah, it was nice, but where is everyone? It would be the tourist numbers, right?
I haven't seen that at all. Like, because I live in Newtown.
Yeah.
And I went out the weekend in Newtown and everywhere was completely packed. So maybe Newtown people are hardier or less sensible
Maybe less tourists as well.
than flaky Bondi residents.
Yeah, maybe.
One of the things I wanted to ask, so Andrew is one of the people in Finder who's pretty well knowledgeable on cryptocurrency and all things related to that. We've seen Bitcoin be hammered hugely today. We've seen lost nearly 50% of its value, and then just recover slightly just in the last few minutes as we saw the ASX also recover. But really, it's going to be a long way before it gets back to where it was. There was a lot of talk about Bitcoin being essentially the digital gold, the safe resource in the crypto world that people could put money in, and it would be stable in dangerous times like this. That doesn't seem to be the case. What's your take on that?
I mean, so Bitcoin has traditionally been, other than brief moments, largely uncorrelated with basically any other asset class. So everyone is kind of free to make up their own story about why Bitcoin is worth what it is. There's a lot of theories going around, but what we've seen in the last couple of weeks is Bitcoin correlating very closely with the stock markets. So we can clearly say that, okay, Bitcoin is not this sort of safe haven the way one of the theories held that it was. Instead, it's this high-risk speculative asset that people are dispensing to cover their losses elsewhere in the other markets. So we can, it's not to say Bitcoin won't theoretically transition into this safe haven asset someday if it continues to do its own thing and break away from these movements. But we've seen that clearly today, these theories are probably not right. It doesn't look like a safe haven.
No. I mean, maybe the crypto bubble was a fantasy the whole time, and maybe it's about to burst. But it's not just Bitcoin. I was looking at all cryptocurrencies today, and everything was hugely negatively in the red. And I don't know. It just seems like the slide is fatal almost.
Cryptocurrencies are just pure smoke and mirrors.
Yes.
To be honest, and you can look at, I guess, the really drastic slides of the stock markets and say how much of that was actually smoke and mirrors. We've had triggered the circuit breakers multiple times now, I think. The trading halts had come because they're just falling too far that one day. And, crypto markets don't have any of these kind of circuit breakers. It's hard to say how much.
That's interesting.
Fallen.
So you don't have any of those slight protections like in the DAO built in, which kind of stop trading. So this is what happens with an unregulated asset, I suppose. you have unregulated behaviour. There's some talk in the media today too about Australia maybe introducing a ban on external gatherings of people above 500, which has already been introduced in Ireland and in a bunch of other countries. And what could be the economic impact of that? I mean, that could be potentially huge.
Yeah, that's right. I think certainly the stock market would have reacted to that as well. That's obviously going to lead to a slowdown in business.
Like it's already priced in. People are.
Yeah, for sure. I think that's what people are kind of expecting, right? I think in people's minds there'll be this idea that slowly gatherings are going to be cancelled, slowly events are going to be cancelled, people are going to have to start working from home.
Yeah.
Which is obviously great for the work at home stocks like Zoom and Slack, which have seen a massive rebound.
Yeah.
But obviously for every other stock it's not great, and for the economy, it's terrible.
I mean, we're basically looking at an almost definite another cut of the cash rate now in what is it? The next one's April. In April,
yes.
I think.
Yeah.
I mean, we as you guys know, we do a survey of economists here, and this shows how unexpected all of this turmoil is. About 2 weeks ago, about a week before the cash rate decision, we asked economists how likely is it we're going to see a cut. 85% said we're not going to see a cut, and then we got a cut.
Yeah.
We've asked economists earlier in the year how likely is it that we'll see a recession, and 90% were saying we're not going to see a recession, and now it looks almost certain. So it's incredibly how quick things turn around. In fact,
Definitely.
one other question we asked them in the survey this month was, what is the chance of the ASX losing 10% in value by the end of the year because of coronavirus?
Wow.
And we got 50-50 response. About half said likely, about half said unlikely. By the time we'd collected the survey and got that result, it had already lost 10% of its value. And now we've seen it's more than a bear market, so it's gone down by 25%. So it's just crazy how fast things can turn around.
Yeah,
You do have stimulus packages coming in though.
Yeah,
And we
so
have these
have you-
economic impacts on the one side, these stimulus packages on the other hand.
Yeah.
Yeah.
It seems like we're trying to plug a very large hole with some very small corks, doesn't it?
Yeah, well, a stimulus package is not going to make the virus go away. You know what I mean? Like that, you can soften the economic impact of it, but it's still going to hit the health system and the people unless there's some dramatic change in. One of the big things that the impact relies on hugely is the percentage of people who get it who are going to die. The fatality percentage.
Yes.
When you've seen estimates all the way from up to 3%, which would be pretty huge. The flu is only 0.14%. But I was listening to a virologist from Johns Hopkins University talk a couple of days ago, and he was talking about looking at specifically the figures in South Korea, where they're being more meticulous about testing people than anywhere else. So everybody gets a test. They're testing people en masse in car parks, and there the death rate's only 0.6%. Which is an awful lot lower, and he reckons that's probably more accurate. So we could be looking at something that's a lot less fatal, potentially, than we thought before. It still means we're still going to get many hospital beds taken up, but it maybe means it's not going to be as impactful in terms of fatalities.
Yeah, I think it's an interesting thing because it's in many ways it's like another flu, right? It's the flu. It's basically like another flu. So imagine if this had been a situation where it was actually very deadly. Or far worse than the flu, how our economies might react. I think we can, maybe in one sense, we can prepare for any future situation through this.
It's like a dry run.
Yeah.
For the full-on plague of 2021 or whatever.
That'd be great.
I've got to be contrary here, I'm afraid. We don't have the hospital capacity to handle. So we look at this curve, right? Don't stack the curve by all getting coronavirus at once. Instead, spread it out. The thing is, this curve is built on top of our current maximum hospital capacity. There's a whole body of research saying that any hospital overcrowding leads to a massive increase in mortality rates. This isn't just if you get coronavirus, you're in trouble. It's if you have cancer, you're in trouble. If you get in a car crash, you're in trouble. If you have a stroke, heart disease, any of these things, you are also at much greater risk of dying from this, because the hospitals will be just packed.
So it affects everybody. It affects everybody of every type of illness, rather than just this. Because
the flu mortality rates are 0.014, 0.14.
0.14 the flu, and this is a 0.6. Is the lower estimate, so that's at least 3 or 4 times.
Well, that's different. It's different between age groups and male and female, right?
So what I've read is it's more heavily affecting men, especially in China, but that's because men in China are much more likely to smoke. So it's about how healthy your lungs are, essentially. So the healthier your lungs are, the more of a chance you have to kind of fight it off.
Yes. Yeah.
So all of that aside, probably to close this off, the best thing to ask is, in this current environment, if you're not going to have your money in the stock market, obviously that's very volatile, where is the best place to invest any spare cash you might have? Is it savings accounts, or should we be looking elsewhere?
For my part, it's really tough to say. If you've already got money in stocks and you haven't sold out, if you'd sold out 2 weeks ago, well done to you. You did good. If you haven't sold out, it's hard to say whether or not it's too late. My instinct is probably too late, but no one can say that for sure. I don't think that I know everything or anything. No one does.
No, and anyone who says they do, don't believe them.
No, don't believe them. Nobody's sure when the bottom of this will be. If you, I would say, if you're looking for a place to put your money, so you've got money in a cash account and you're looking to get some kind of return at all, I'd probably wait a little bit for the stock market to settle. But I definitely keep an eye out, because this is a great opportunity to buy good quality companies when the market does go back up. And you don't need to be too careful about timing it. If you've got a 20-year time frame, you start looking at investing now. So it's probably not going to, history tells us it's not going to be down forever. It might take, the GFC took 7 years? That's not great. I don't know if this will take that long as well, but if you've got longer than that, there's a good chance you'll get a decent profit from that in the long run, if you've got a long time frame. If you don't have money that you can risk, because maybe you want to be putting money into a house in a year or so, or less than a year, or even 2 years maybe, I'd look at a high interest savings account.
That's actually probably the same. And if you're going to look at those, I'll just add the best value in the market right now for savings accounts is away from the big banks. So you'll get accounts with the big banks where you have to put money in and you can't take money out, and you get about 1.5-ish% interest. But your money's kind of locked in and you're restricted with what you can do, but also the interest rate isn't great. If you look at the smaller banks like ING, Ubank, even the neobanks like 86400 and Zinja, those guys tend to have the best interest rates in the market right now, and generally you can get that interest rate even if you take out your money once you get money paid into your account initially. So that's where the flexibility is. What do you reckon, Andrew? Where would you keep your cash?
Well, Zinja will be tempting, but I think it's stopped accepting new.
Oh yes, literally, like last week I was looking at Zinja and I was like, I'm going to open an account and open a savings account, and within half an hour I got the email saying we've now closed savings account options with Zinja. So I was probably one of the last ones in the country, and then they closed it to everybody else. But they've done an interesting thing of keeping the high savings rate for current customers rather than passing on the cut and then blocking off applications.
Which is a bit of a worrying sign in itself. So
Yeah.
I certainly wouldn't be putting everything to Bitcoin right now myself. But at the same time, you can't help but think, you look at the oil price, whereas you look at every sign which suggests that the coronavirus is going to get worse before it gets better. We've only scratched the surface of potential infections in the US. We're going to have a whole new slowdown and its side effects over there, in Australia and elsewhere. We're looking at a period of months, I think, before we really do hit the bottom of how low we can go. And even at the end of that, we still haven't addressed all the underlying economic factors which caused the last GFC and are still causing potentially this next recession. We still have this high household debts, we still have high corporate debts, including the energy sector, which is completely up in the air now. There's potential for this to pull credit out of the banks as they tighten mortgages. That could impact housing prices. There's still
that's the interesting stage when it starts to impact house prices, because we've seen house prices go up pretty dramatically recently after falling last year, driven only by cheap credit and FOMO. There's nothing else economically driving the increase in house prices. And they've gone up crazy, and it's almost like people who were trying to get into the market have missed the bottom of the ladder. So the big question is, when will this economic downturn start hitting house prices, and will it at all? Because you could be looking at some people pulling money out of the stock market and putting it in housing because it's seen as safer. So maybe there might be a bit of a delay before we start seeing cheaper housing.
Yeah, that's right.
Well, no one says the phrase "safest houses" anymore in Ireland after the GFC anyway. Okay, cool. I think we'll leave it there. Thank you guys. We can't shake hands anymore because of coronavirus. We can do fist bumps.
Can we?
Yeah. Well, no, you need to watch the front of your hands.
Yeah, where's the hand sanitizer?
Cool. Hope you guys have enjoyed that slightly rambling chat. You can check out Kylie's economic writings on Finder. You can check out Andrew's cryptocurrency writings on Finder. You can check out my Insights blog there as well. For all the news, keep your eye on finder.com.au.